In today's video, we're going to talk about repairing your credit. I'm going to tell you exactly what you need to look for on your credit reports so you can get started, so you can benefit from having good credit. If you have good credit, I'm telling you, a lot of the problems that you're experiencing right now financially and with your debt, you're going to be able to start seeing those start to wash away. And the reasons why is because everything is like, it starts with your credit. If you were like building a building up, the foundation of everything would be your credit. It would be like the foundation of your financial future, the foundation of how you move forward on saving money, the money that you spend, the money that you're able to invest, the opportunities that are available to you. It starts with your credit. I feel that I just know from my own personal experience what I've went through and the difference it's made in my life. And I try to get this across to as many people as possible. The number one reason why people get divorced, families break up, is over the finances. But if you go to the root causes, and if you start to dig down and look back and say, well, where was the breakdown? First, the breakdown happened from the way that they utilized their credit. And then once the credit went bad, it just screwed up all of the different options that they had available to be able to move forward in their life. So I want to make you aware of some of the things that you need to know about what bad credit will do to you on being able to move forward in your life. So I have my list here, and let's just go over it real quick. My employees are starting to come in, so if I wave to people, that's what I'm doing. All right, so high interest rates. If you have bad credit, you are susceptible to paying high interest rates. That's if you even get approved. But let's just say that you do get approved, because there are predatory lenders that are out there that will approve you. And every time that you end up taking a predatory loan, you are actually taking money out of your pocket. So a lot of people don't want to lose money, but when you look at the alternatives on how you are able to move forward and the types of lending that you are going to be able to qualify for, that's a result of having bad credit. So money is coming out of your pocket. And then getting rejected for loans just outright. Like imagine you need to get this car for transportation to be able to go drive further to a job, or to just have dependable transportation to go to your job. And you can't get approved. And then, so if you, what ends up happening is that you don't have dependable transportation. You don't have dependable transportation. You don't have a dependable way to get to work. And what is the job going to say? You can't work for us because one of the qualifications is to have dependable transportation, because we need you to be able to get here to work. So having bad credit and not being able to get dependable transportation makes it harder for you to be able to move forward in your life. Limited credit card options. This is a biggie because the rates are going down. But even before the rates went down, I'm here to tell you with my own personal testimony is that the credit card rates during this whole time that they were going up for everybody else, the credit card companies, because I have A+ credit, 834 credit score, were offering me 9% on credit cards, 9%. And some of you might be saying, well, that was, might be some type of, offer 1 year or 2 years or whatever it is. Does that really matter? That's like giving an excuse on something. If you were paying, let's just say you're paying 29% on the credit card, and then you're going to pay 9% on that credit card. You do the numbers and add up the savings that you have, that you would be able to put that money towards other things. These are some of the things that you need to understand. And these are like the things under the cover, under the water, that people don't see. But the root cause of it is because of having bad credit. The next thing is Insurance premiums. This is one that people rarely talk about. Car insurance, even health insurance. These places look at your credit to determine the risk factor on you. If a person is under a lot of anxiety, a lot of stress over paying their bills, and their credit is destroyed, and you go to apply for insurance for your car or insurance on your home, and they look at that and they're like, this is a risk factor. Insurance companies, auto and homeowners insurance companies determine if a person is a poor risk by looking at their credit scores. Yeah, there's plenty of companies that will insure you, that will take your hard-earned money and charge you a premium when you don't have to pay that amount. And again, and I know, and I'm going to keep repeating it, when your credit is bad, you're going to pay more for the same things that other people with good credit pay less for. And what does that do to the family? What does that do to you in your wallet? It takes money out of your pocket. Housing challenges. It's difficult to rent a place because they're going to look at your credit. Security deposits. Think about this. I saw where people, I was getting my my iPhone. I had a problem where it had this SOS issue on there where something had went wrong with the SIM card. And I'm sitting in there and they're making a person put a deposit down so they could be able to get cell phone service. A deposit. Between my 3 companies, I have over 22 phones, and I have no deposit. I have 22 cell phones for employees, and I have 2 cell phones for myself, 2 for my wife, and the rest are all throughout the company for different employees. I never had to pay a deposit on any of that stuff. I had gotten internet service because I live in an area that does not have any wired internet. So we had to use a different type of internet out there. Did not have to pay any deposit. So people are paying higher security deposits based on their credit scores. If you have poor credit, even if they did require a security deposit, they're going to require that you pay a higher security deposit. Job opportunities. You've heard about this one. And it's growing more and more each day. I'm in some on some calls with different business organizations. I've done some work with the Chamber of Commerce, African American Chamber of Commerce, and one of the things that they look at is they are looking at how can they evaluate potential employees. And one of the ways that they look at it is they don't run the credit, like do a hard pull on someone's credit. They do a soft pull on credit so they can see how you're living your life. Because you can look at a person's credit report and see if they're like everything is out of whack. And it's up to that business owner, or up to that company, that corporation. And you never know if they're just going to slip your credit report through an AI generator and they're going to say, AI that's programmed, what do you believe this person is going through? Because everything that is being done with credit is to do a risk analysis on you as an individual. And so do we want to give them the best of you? Because you can walk in and give them the best of you. But we know, just like you would check someone else out if you were going to do something with them, they're checking you out. And the number one way that they check you out is by looking at your credit reports. If you're looking at starting a business, if your personal credit is messed up, you will have a hard time getting funding for your business, if you're able to even get any funding. And then if you're able to get any funding, it's going to be the type of funding that's going to set you up for failure. Like, I've seen business owners and I'm like, this loan that you got, went out there and got one of these merchant funding loans, and because their credit was screwed up and the commercial sounded good, but they're dipping into your bank account every day. And then they're like, Steve, I need help getting out of this loan. And I'm looking at it and I'm like, I'm not here to throw any shade or shame on you, but this is not a good loan. Did you really understand the terms of it? Well, it sounded good and my business needed the money. And then I said, well, why didn't you just go and get funding from a bank or credit union or, some other type of funding? My credit was messed up and they kept turning me down. So that means that rather than getting yourself and your business into a bad situation, let's go and look at fixing your credit. Yes, it's going to take a little bit of time, but if you get into a situation where your business is going to get shut down because you got one of these loans, I bet at that time you want to go and fix your credit. Now you got two problems. You got a loan against you and you got bad credit. Stress and anxiety, and I touched a little bit on it. When you cannot get the things that you want, when you are under financial stresses because you're paying more and you know that people who have good credit are paying less, it puts strain on you because you start to feel that you're not being treated equally. You start to have that feeling that things are working against you and that things don't work for you. And it's simply because of the position that you've put yourself into. If you fix your credit, do the work to fix your credit, you will start to see that things are different because people are looking at you and your credit. And because your credit is repaired, because your credit is good, because you have a good score, because you did the work that you know that they're going to look at, and it's like you know what they're going to be looking at and looking for, and it's put together, and you're the complete package, and your credit is a complete package. It takes away the stress and anxiety. Imagine going into a place to get a loan, and they come back and they tell you, well, this is the terms that we got for you, and you stand up and you say, well, I'm going to go and take my business somewhere else, and they will wave you back and say, hey, let's see if we could get you a better deal. The reason why is because they first maybe didn't think that you knew the value of your credit. But when you really understand the value and the power of your credit, these companies will do anything to get your business. They will do anything to do your business. I talk about a story that happened with me with and some of you know my wife, she had a double lung transplant. So being on airplanes and that type of stuff, they told her this was going on during COVID. She went in 2019, December of 2019, right before Christmas. She went into the hospital and had a double lung transplant. And when she recovered and got out, yes, we had to mask up. We had to be very careful because her immunity to stuff was very low. And we were like, well, we're going to get an RV and just travel around that way. We don't have to worry about hotels. We don't have to worry about flying, all of that type of stuff. And we went to get an RV, and I know my credit 834 strong. 834 strong across the board. It might be 834 and then 837 or 820 something, depending on what I've done throughout that month. But I know 830 something strong or 820s. And the guy came out and he was like, this is what we had to offer for you. And I was like, that's right away, that's not good enough. You got to do better. And you want to know what this guy did? He turned over to a guy and said, do we got any coupons available? Rate coupons. I don't even know if it was even true about a rate coupon. But the guy said, yes, we got those rate coupons. And you want to know what they did? They lowered the interest rate 2 percentage points lower for this quote unquote so-called rate coupon that I didn't even see. And now let me tell you something else that happened that was very strange. That was very strange. And this is a true story that happened to me. I walked out of there and went ahead and took the RV and took the loan on the RV. Very good rate. Was like, I'm happy with this. This is an excellent rate. I'm very happy with it. 1 or 2 months later, I received a letter in the mail from the finance company who financed the RV, and they said, because your credit score is so good. This is the truth. This is the truth. I'm going to pull out that letter one day. I was shocked when I got it. And they said that we're going to lower your percentage rate another 1.5%. I've never seen nothing like that before. And this is the reason why. If we want to logically know what happened, is that the company that I purchased the RV from, they were maybe, for whatever reason, they wanted to try to take advantage of me. And they know that this company has instructed them, and this is some of the stuff that you gotta watch out for when your credit is strong and you go out there. You got some people that are trying to play some games on you, like they're doing you a favor when they're not really doing you a favor. And I fought to get a lower interest rate, and me and my wife were willing to just get up and walk out of there. We were like, we'll just get up and go. And so people, you got to watch out for that. But they know that this company said, if you have someone that has this rate, that has this type of credit score, we consider them premium, prime, that we need to give them the best rate possible, because you never know. We want to earn their business for other stuff. And we don't want to make it like, they're out there and they're like talking with their friends that got RVs or whatever. And this company specializes in RV financing. They don't want to have people out there, because when you're RVing, people, we talk with everybody. RV people, when you pull up and everybody talk with everybody. And those conversations could be out there and they're like, hey, we don't want Steve out there saying that he got this percentage rate and we done gave all of you other people this other percentage rate, because he's going to be pissed off, especially with that score. So they sent a letter to me and they said, we reviewed your credit application and you qualified for another 1.5% reduction on your interest rate. That's what they sent. So when your credit is powerful, you are going to have the doors are going to be wide open on what you want to do. Now, I'm going to tell you be careful. Don't get yourself in any bad situation. Be careful with your credit. And that goes into the next thing, is missed opportunities. You could be missing out on huge opportunities simply because your credit is not where it needs to be. I'm serious. If your credit is right, and maybe you need to get the money to be able to be part of a huge opportunity that's going to benefit you and your family moving forward for the rest of your life, you don't want to have your credit stop you from that. I've even seen where people had an excellent idea, pitched it to investors, and the investors checked out the individual, and because their credit was bad, they didn't even take on that individual. It's like they just flush that excellent opportunity down the toilet. Yeah, the person can continue. There's other ways to do stuff. But just think, something that you have control of, which is your credit. That's something that you have control to be able to get to fix it. And we're going to get into that in a minute on what to look for. Why wouldn't you go ahead and take care of that? Because there's so many other things in our life that happen that we don't have any control of. Credit and debt, you do have control of. If you understand the power that you have, and that you have the power to start the process, to start fixing it. And then when it comes to just everyday cost of expenses. So if you add up what you're paying for auto insurance, what you're paying out on homeowners insurance or renters insurance, what you're paying out on security deposits, what you're paying out on credit cards, when you add up all of that stuff, Think about it. The money that is leaving your pocket when it could have stayed in your pocket to be utilized for more important things that you need to take care of, investing, your future, opportunities. Just having money in your pocket. Just having money in your pocket that you don't have to spend. Like, think about this. Let's just do this for a quick exercise. If you had excellent credit and all of your interest rates were to be able to be lowered, you either by refinancing or they just gave you just rate and term reductions, or you switched stuff over to lower interest credit cards because your credit is straight. So you don't do nothing else, no going out there getting loans or nothing. How much extra money would be in your pocket just by taking a few percentage points down on your interest rates? How much of a difference would be in your pocket? That's what's the power of what you have the money now, but it's being utilized in ways because your credit is destroyed, because your credit is bad. So yes, you got to start working on fixing your credit. So now let's do a quick walkthrough. Sorry about that. Let's do a quick walkthrough of what you need to do to start fixing your credit. The first thing that you got to do is you got to get all three of your credit reports, because that's where everything is going to start. How can you fix your credit if, number one, you don't have all three complete? I know that there's a lot of services out there where they can try to give you some stuff and, we'll do this and give you a half a report and stuff like that. No, you need complete reports. When I say complete reports, that have all of the detailed information on there about what is going on with the account and who placed that information on your credit reports, because you're going to need that when you start the dispute process. So if you need your credit reports and scores, go to the website, YOUR and the number 3 credit scores. Your 3 reports. I'm sorry. Let me get that real quick. Sorry about that. Go to your3scores.com. YOUR, the number 3 scores.com. Grab your TransUnion, Equifax, and Experian credit reports and all 3 scores. Now, once you get those credit reports, what you want to do is you want to review your personal information. You want to make sure that you don't have aliases on there, because think about it. When they slip that paper in your application and it has your social security number attached to it, it's going to spit back out. All of this stuff is done by algorithm. It's not done by a human looking at your credit. The human is going to read and see what you're qualified for, but it's going to be spit out by the AI algorithm. And so if you have aliases on there, that's going to make it look like you're trying to get credit in a different name. And that alias could be simply one letter, or you had your middle name or middle initial put in there. You need to make sure that you have your names across the board on TransUnion, Equifax, and Experian the way that you want it to be, and you need to get rid of those other aliases, because I'm just here to tell you, these people are always suspicious when they're running people's credit. They're always suspicious because there's a lot of crazy stuff going on right now with people doing fraudulent credit reports and setting up fake credit profiles and all of that. They want to make sure that they're dealing with the right person, and having those aliases on there just makes it to where there's questions. And remember, it's going to be an AI computer that's going to read that. They're going to read that and they're going to say, well, it got like 5, 6 aliases. So get your credit reports, go to your 3 scores, grab your credit reports, and look at those aliases on there. Any personal information or any stuff that does not match or that is outdated, you want to get that stuff off of there. Get it off of there. Now, the next thing that you want to do is you want to look at all of your accounts. Make sure that there's no account that is sitting on your credit reports that you did not authorize to be there. When I had first started, after my credit was repaired and credit monitoring services started coming out where they were like, hey, get your credit reports. You always need to know what's on your credit reports. And so I was like, yeah, I do need to do that. And when I got my credit reports, there was a target card that was on there. Now, whoever used my credit to get that Target card, they actually paid off the card, and then but it didn't hurt my credit. But I did not know that my credit was used for a Target card, and so immediately I called them and said I did not, do this, have this Target card. I never applied for a Target card. They closed out the account. The individual did not. Whoever did it, they it was only like a couple of $100. They did use the card and paid off whatever they had got from the card. So the thing is that I didn't know that card was on there. And if I didn't have a monitoring service, even though that didn't hurt me, I wouldn't have known that it was on there. And what if that individual was to try to use my credit again? Maybe that was a test that they just tried to do, like, okay, we're going to test it. If they don't notice it, then we'll just blow it up and just get all of this stuff in their name. That's what ID theft type people will do. That first they'll do a little test, and then if they don't see that you did anything, and the only way you would know is if you had credit monitoring where you got alerted that an inquiry was done on your report. Because I didn't have credit monitoring at that time, there was an inquiry from Target on my report that I was never notified about, and they got the card delivered to wherever address. When I looked, I'd never lived at that address. But because I didn't have credit monitoring, I never got any alerts about that. And I suspect that because I got the credit monitoring and then I closed the account, that individual probably got that notification or whatever, tried to use the card again and saw that was a closed account. They were like, okay, Steve is monitoring his credit. Let's move on to someone else that is not monitoring their credit. So you got to have a paid credit monitoring service. So I suggest that you go to the number 3scores.com, get that. You're going to have all of the alerts. You're going to even have ID theft protection. And yes, we're always here to help you with that. So review for any accounts that shouldn't be there. Now, the next thing is to review the negative accounts and the positive accounts for any errors, like accounts that you do know that you have positive ones. Make sure that they're getting reported. Make sure that the payment history is right. Make sure that the balances are updated. Make sure that all of that is accurate, because that's going to play on the algorithm with your credit reports. The next thing that you got to pay attention to is and this is where the work starts, is getting on that negative credit. Do you got bankruptcies? Do you got medical debt on there? Do you have charged off accounts? Do you have collection accounts? All of that stuff that you have on there, you're going to have to look at it, and you're going to have to put together a strategy to tackle each one of them. Bankruptcies are tackled a different way. Charge-offs are tackled a different way. If you have medical debt, that's tackled a different way. But I'm here to tell you that all of that stuff can be taken care of, but it's going to take a little bit of time. It's going to take work. So if you put in the work, you look at what's wrong with it, and you start to approach the credit bureaus about the inaccuracies, but also if you're dealing with negative accounts, that's why you got to have a paid monitoring service, because it's going to have the furnisher information. A furnisher is who put that information on your credit reports, because you're going to need to know about how to tackle, you're going to need to approach them also. You don't want to just utilize the bureaus to repair your credit. You're going to want to also go directly to the furnishers with any issues that you see, regardless if it's a collection, regardless if it's a charge-off, medical bill, whatever negative it is. Once you understand the issue and you put together your strategy to be able to get that information removed off your credit reports, you're going to need to be able to tackle it through the bureaus and also send that dispute information directly to the furnishers. That's how you're going to get your best results. And once you do that, you'll be able to see that over time, over a period of time, because one of the frustrating things that people have with credit repair is that they think that you should just be able to walk right into the bureau and they're going to take care of this stuff. No, these are huge corporations, and they have a process, and the process is put in place, and the process allows them time to be able to review, allows them time to make a determination, and also the determination does not even have to be 100% right. And that, I know that frustrates a lot of people, but that's part of the work. But what I tell people to think about is, once this is corrected, once your credit is where you want it to be, all of that time that you put into it, that's going to wash away, because you're going to be able to just move forward. And the quicker you start working on it, the quicker that day will come to you on you being able to move forward with your credit. All right, if you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different, so you can see my 8-point validation process, my 2-phase settlement process. If you need your credit reports and scores, go to www.your3scores.com to grab your TransUnion, Equifax, and Experian credit reports and all 3 scores. If you have debt collectors coming after you early, and this could also help you with credit repair, is grab my statute of limitations letter, debt validation letter, and cease and desist collection activities letter. Use those for your specific situation. They can help stop debt collectors in their tracks, because, you know, they're not expecting you to ask them these questions. If you don't respond to them within that time frame that they have on that debt collection letter, you are saying yes to it, even if you don't owe it, and they're going to be allowed to place that information on your credit reports. Thank you for your time. Please subscribe to the channel, post your questions and comments. This is Stephen A. Williams, President and founder of thecreditrepairshop.com.